Hello, everyone, and welcome back to another episode with your boy Money Spence. In today's episode, we're going to cover day trading futures for beginners. This is going to be a step-by-step guide. Let's take a deep dive into the session. Futures trading offers high leverage and the ability to trade without the PDT rule. However, it also requires discipline, a strong strategy, and proper risk management. This guide will walk you through the essential steps to start day trading futures successfully. Part 1, Understanding Futures. What are futures? Future contracts are agreements to buy or sell an asset at a predetermined price on a future date. Unlike stocks, futures are leveraged instruments, meaning you can control a large position with a small amount of capital. So why trade futures? I honestly think you should trade futures because you have leverage and it requires less capital than stocks. They're very liquid. So major future contracts, such as the ones that you see on our screen, the S&P 500, the NASDAQ, and the Dow, they're some of the top, liquid future contracts that you want to focus on when it comes to day trading futures. And with futures, you don't really have to worry about no PDT rule. So you can trade as much as you want without needing $25,000 in your account, unlike stocks. And get this, the futures market, it's 24/5, meaning most futures market operate almost 24 hours a day, 5 days a week. Part 2, choosing the right future contracts. Beginners should start with contracts that have high volume and they are well-known contracts. And the two well-known contracts that most day traders like to trade on a daily basis, it's the SPY futures and the NASDAQ futures. Each contract has different, margin requirements, but we're not going to get into that because I'm going to actually help you trade futures with a prop firm. So now we're going to focus on part 3. So part 3, that's going to be setting up your trading account with a prop firm. So the prop firm that I'm currently trading with, it's called Top Step. So if you don't want to risk too much of your own capital, trading with a prop firm like Top Step is a great alternative. Top Step, it gives traders with funded accounts, allowing you to trade with their capital while keeping a percentage of the profits. Here's how Top Step works. So before you can get a funded account, you must pass an evaluation stage. It's a 2-step evaluation with profit targets and risk management rules. So let's say, for example, if you wanted to trade with Top Step, a prop firm, they specialize in futures trading. You would open up, you would sign up on the Top Step website. You would click on Start a Trading Combine. You click on that Start Your Trading Combine, they'll give you 3 different options that you can choose from. The first option, it's the 50K account. You pay $49 for this account. The second option is a $100,000 account. You pay $99 for this account. And the third option, it's a $150,000 account and you pay $149 for this option. With each Combine account, you have a profit target that you must reach before you can get a funded account to trade futures. So this is the first account that I always suggest, and it's the most popular. You'll have to make $3,000 in this account, and the max that you can lose in this account is $2,000. Now, let's say, for example, if you do decide to sign up with Top Step to trade futures, you want to click on this option and you want to select Top Step X. Don't select any of these other ones. Once you pass the evaluation stage, you can get funded. You'll receive a funded account and you can trade real markets utilizing Top Step money. And with Top Step, they do a profit split. You get to keep a percentage of your money and they get to keep 10%. But your first $10,000 that you make, it's yours. But when you do start trading, make sure you keep this $2,000 risk management rule in mind because they are only giving you max $2,000 to play with. Once you lose that $2,000, your account, it's going to be blown. So Top Step evaluation rules, the most common combine, we already covered that. Let's cover Top Step's risk management rule. So they'll give you $2,000, right? A fresh account. Let's say, for example, in your funded account for that first day, you lose $1,000. You'll have an additional $1,000 wiggle room for the following days. If you lose that $1,000, you'll blow your whole entire account. So make sure you keep that in mind if you do decide to trade futures with Top Step. And peep this, it's only $49 to get started. You're not risking a large amount of your own capital. So please keep that in mind when you think about trading futures with Top Step, or if you think about trading futures with your own capital. I honestly would not suggest that you trade futures with your own capital because you'll experience a lot of volatility. We're on part 4. So before you take a deep dive into trading futures, you want to paper trade your futures first, and you want to work on learning a futures trading strategy. Now, the best strategy that I think would help a lot of individuals out as a beginner, it's the 15-minute open range breakout strategy. And it's a list of indicators that I'm going to be utilizing for this strategy. We're going to be utilizing VWAP. That's the purple line right here. I'm going to highlight that section. We're going to use VWAP. We're going to use the MACD. We're going to use the RSI. And we're also going to use the pre-market high, the pre-market low, and the first 15 minutes of the day, resistance and support zone. And last but not least, we're going to utilize the TTM scalper alerts. The TTM scalper alert, that's these green and red arrows that's developed on my chart. So here's the strategy step by step. So in order to trade this strategy effectively, you must identify the opening range. So you want to mark the high and low of the first 15-minute candle after the market opens up. So I'm going to adjust my chart to the 15-minute chart, and we're going to highlight this first 15-minute candle. This is the strategy that you're going to utilize when you start paper trading futures. You're going to utilize the ORB 15-minute trading strategy. So here's the first 15-minute candle of the day. And I have my resistance up here for the first 15 minutes, and I have my support right here, right? Keep a close eye on those areas. They're going to be extremely important. You want to identify the opening range, and then you want to mark your chart up with the high and the low of that, first 15 minutes of the trading day. And then you want to wait for a breakout. You want to enter a trade when price breaks above the high of the first 15-minute candle, or you want to enter below support when we start breaking below that support level. And you also want to check your RSI, and you also want to check your MACD to confirm the trend. And make sure you have a risk management strategy in mind as well. I'll usually risk about $500 in some cases per contract, but with futures, risk management, it's the most important aspect of day trading when it comes to futures because the moves, they are so volatile. So understanding futures contracts, you must have a general idea of how much money you can make per point. So with NQ futures, make sure you write this down as well. Make sure you write this golden nugget down. This is going to be extremely important. With NQ futures, they move $20 per point. Let's pull up an example. So this 1 minute candle right here on the open, it closed at 18,994, right? That's the closing price of that candle. 18,994. This 1 minute candle right here, we had a high of $19,057. So we're going to subtract 19,057 from the closing price of this candle right here. Let's say, for example, if we decided to, get in on the, open, right? Decided to get in on the open at $18,994, and we sold at the high at $19,057. So we would get a positive number of 63 points. So 63 times 20, that would give us a profit off of one contract, $1,260. And that was in the matter of probably 3 minutes. So that's how much you can make off of an NQ contract per point. Now, if you're trading SPY futures per point, it's going to be $50. So with NQ, let's say, for example, if you were playing the 15-minute ORB trading strategy on the open. So you waited the first 15 minutes of the trading day to place your trade. So this 15-minute candle, it closed in this area right about here. So we had our levels in this area, the 15-minute ORB trading strategy. Now we have to wait patiently for a possible entry toward the upside or downside. In this case, I would probably recommend playing the downside, this 1 minute candle right here. We had resistance up here earlier, and it's always best to buy your short positions close to your resistance areas. So this 1 minute candle, it closed at $19,029.75. Let's type that number in really quick. 19,029.75. That could have been your entry price for a short towards the downside, possibly. Now, let's say, for example, you got in right here and you sold your entire position right here at 10:13 a.m., right? About here, once we broke below the 15-minute ORB support zone. You sold your position right there, right? And the low of that candle was $18,869.25. So we had 160.50 cent move. You would multiply that by 20, and you would have a profit of $3,210 off of one contract. So make sure you rewind this part when it comes to how to calculate the points and how you can make profits and how you can also, take losses from your future, contract as well. Because let's say, for example, if you get in on the wrong side in NQ futures, if you would have got in right here and it start, pumping 20 points, you would be down $400. So when it comes to, trading futures, make sure you keep those points in mind. So for NQ, it's $20 per point. And for SPY futures, it's $50 per point. So if NQ is trading at $19,000 and that's the price that you got in at, and next thing you know, it's trading at $19,001, you're going to be up $20. So before you take a deep dive with, trading futures, make sure you're practicing in a demo account first, because you don't want to get into a habit of paying for multiple combine accounts and then, you're spending an excessive amount of money on combines. Make sure you work on your trading strategy first. With Top Step, you have a option to trade in a practice account. You don't have to always trade in your combine account starting off. You can pay $49 for your combine account, and then you can activate the practice account and practice in your practice account first before you start trading in your combine account. You want to work on mastering the 15-minute open range trading strategy when it comes to trading futures. Once you're comfortable, transition to your combine account, and then you can start off with one contract only. Do not buy two and 3 and 4 contracts. Futures, they move at a fast rate, family. So I've been holding this current account for the past 7 trading days, and I am comfortable with averaging $411.83 on a daily basis. I'm not trying to, hit it big. I'm just trying to focus on a couple $100 on a daily basis. If I can make $400 on a daily basis for 25 days straight, that's $10,000. So I'm just keeping things simple and straightforward. Now, my final thoughts: day trading futures requires patience, discipline, consistency, whether you're using your own capital or a funded account with Top Step. Focus on mastering one strategy, improving your risk management, and journaling your trades. Over time, you can refine your approach and scale up for long-term profitability, but you want to start off small. Do not buy a combine account and come out of the gate and purchase 5 contracts. Family, and if you don't do anything else, do not trade your real money. Trade your prop firm money with Top Step. And it's pretty easy to pass the evaluation phase. You just got to focus on discipline, patience, and risk management. And I promise you, you'll have success with trading futures. If you found value in this video, please make sure you like, subscribe, and drop a comment below for some feedback. Have a safe, blessed day, family, and thank you once again for rocking with your boy, Money Spence.